Hi, Dana.
Hey, how you doing, Dale?
All
You
right.
hear me now? Am
There
I
we
on?
go. Yeah, we're on
Okay.
now, and
It's
let me
nice to be
just.
promoted.
Yeah.
It-
Let's see. There's the old
uh,
share. So okay. So happy New Year, buddy. How are things going?
Someone else is sharing.
That's me.
It's
That's me. I'm going to stop now so you could do it. There you go.
yeah.
David Hess, did you grow up in Skokie? Okay, I'm going to allow you. Okay, Brand. Okay, so wow,
All right.
lots happened since you and I talked, Dana.
A lot has
red
happened, yeah.
the
Well, we can
red
say that
wave.
we can say that every time, right?
Well, yeah, a lot happens
That's
every
what
3 months. Every
that's what
three,
markets do. Yeah.
yeah, unless it's private equity when it's opaque and you don't know, even though they tell you that. But so okay,
No,
correction.
it's been a very yeah, go ahead.
No, so where's your head at? Here's what I think is the key question. So MAGA's under pressure, okay? And I don't know if they can make new highs. I think they could retrace, but I think there's money flow out of MAGA into things that weren't like people are starting to buy fertilizer stocks. It's a different blend of what people are going into now, and the source of funds are MAGA. Do you agree with me?
Well, there's so much money out there still that
Okay.
it's gonna find it's gonna go somewhere, right? And if you talk about what where was the money, before the summer correction,
Yeah.
obviously mega semiconductors, the AI
Yeah.
trade, what have you. Well, you mentioned
Semis haven't made new
fertilizer.
highs yet,
What's that?
but I'm semis haven't made a
No,
new high since
semis have
July.
not made a new high. Um, you're seeing clear lower highs there, and a lot of those large cap growth names that were all the rage back then.
Like
Although, you
Nvidia.
know,
Yeah.
hey, check out Nvidia doesn't look as bad still as the others. I don't know that
Okay.
there's not one more run in that one. We don't play individual stocks too much, but looks a lot better than the semiconductor than the
It
SOX does.
does.
But
Yeah.
yeah, that trade looks to have topped out back in August, and you saw a ton of rotation back then out of, like you said, that Mag 7 stocks and into a lot of other stuff, defensive names, some of the other cyclicals, but a lot of the broad markets. So the breadth, if you look at, for
Has
example,
been lousy, right?
um, what happened, yeah, recently, but if you move back to, okay, this is a value line geometric. This tracks the median stock. So
Yeah.
back in August, you saw that huge blow off in semis
Yeah.
and the
Right.
Mag 7. It's not even a blip on like the broad market charts here. Held up
Right.
well and moved to new highs pretty quickly. You look at the equal weight S&P. This is the
Look at
blow
where it
off top
held.
in semiconductors. It doesn't even register on here. In
Yeah.
fact, held up well. And what happened around then is the broad market and the breadth really started improving and took off. Um,
Yeah.
and I think the last time I was on it was maybe in October leading up to the election. And what we thought was happening did pan out. We saw, the typical pullback in October leading up to the election. You saw volatility readings off the chart. People were getting all fearful and pouring into volatility for no reason because the setup was still strong. And after the election, we saw the unwind in volatility. We saw
Yeah.
a lot of the broad markets take off. Some of the things I think that we talked about in that interview was the small and mid cap pure value indices. We were waiting for those to take off, and we saw a real nice breakout, which is a good sign of risk on versus risk off. the small cap, mid cap, pure value really took off. So
Yeah.
that
Gave it
was
all back.
that was
Yeah.
expected.
Okay.
What wasn't expected is,
How it gave it back.
you come into December, we're
Yeah.
hitting on all cylinders, and all of a sudden the tide turns. So,
Yeah.
the interesting thing, sorry, for us is, we're all quantitative. So we do what our models tell us to do, and our models are mostly based on basically what is the broad market, what is the market in general doing. The studies have shown 70%, 70 some percent of the direction of a stock is based on what the overall market is doing. So we want to measure what the overall market was doing. And
Right.
we've got a number of indicators that tell us that. The interesting thing is a week and then 2 weeks into December, the breadth and our indicators, which are many of them are slow to turn typically, they turned on a dime and started heading down. So
Yeah,
that
like
was,
the Dow. That looks a lot like the Dow break that we
yeah.
had. And
But if I,
and would you say that it's foreign money that comes in and buys the Dow stocks because they want the security of large caps?
maybe that's true, but like I said, there's so much money out there, still sloshing around, from the central banks,
Do you,
that
do
it's
you
going to
think the Dow
find
can do you think
somewhere.
that there may be a lot of money, but do you think the Dow can make a new high from here?
I
I
think it
mean,
can.
okay.
I think the averages can. I don't know that they will. I think they can. But just to quickly finish on back early December, if I look at the S&P, I think, okay, what are my indicators doing? They're probably holding up pretty well. They were falling off the table, so we got a sell signal like a week into December, which was extremely well timed and got us a little bit defensive. We should have gotten more defensive. I'm stubborn sometimes, Dale. I should just listen to these models that we built because they're much
I
smarter than
know.
us. But it was interesting to see. And then you look at something like the equal weight and
Yeah.
some of the broader markets, I mean, they
They
really
tagged pretty
collapsed.
good. Yeah.
Yeah, they got tagged. So from that perspective, just another lesson learned. The models are always smarter than us, and it's interesting to see what has happened to the market internals. And because we're going to follow those, we're going to follow the broad market. It's interesting to see what has happened um, since the beginning of December, because you wouldn't think that just by looking at the S&P chart. But
I know you're married, Dana, but before that, how many models did you date?
uh, only one
And
model that matters for me,
all
Dale.
right. And
So there we go.
were they smarter than you?
Always smarter. I'm not a very
All
smart
right,
guy.
all right, all right. Yeah, you are.
One internal piece of optimism here. The AD line. So this one, going back 60 years, has always topped out ahead of the S&P. There's always been a divergence. Every
Yeah,
cyclical top in the last 60 years. This one did peak the beginning of December. So there might have been a day in there of divergence, but I think we're going to see a much bigger divergence
okay.
before
That
the
makes
ultimate top.
sense.
So we could still see a blow off top in
Yeah.
some of the averages. I don't know. You look at something like the semiconductors, like I showed, that looks toppy already. The Dow, it's going to take some work to get back up there, but
Yeah.
I'm not putting out of the realm of possibility that another blow off move to the upside before
Well,
the.
let's talk about what could be the catalyst besides the new administration. So the market really held up during this dollar rally. And
Yeah.
I'm short the dollar now. All right. I think
Mhm.
that we peaked. And the
Okay.
bonds, huge call buying yesterday prior to this number. So, what have been headwinds,
Prior to
if
the
they
number,
turn
but
it,
it wasn't prior to somebody having the number, right?
well, I'm not implying that. I'm just saying that big money were buying TLT calls yesterday.
Mhm.
There were, the yen had stopped making new highs. There were signs of
Yeah,
that yields could come in, and everyone hates the euro, okay?
yeah.
And we could be putting in an important high in the dollar here. Do you think so?
I we're short the dollar right now.
Yeah.
Just it'll be a trade if we
Okay.
retrace back to 106 and change. We'll take that off, but we are hitting the 61 retracement there
Yeah. Yeah.
from the 2022
Well,
peak.
this
So
would help a melt up, no?
it theoretically it would. The funny thing is, you look at gold, which has held up great in the face of the dollar rally. So,
Yeah.
those relationships. That's why we don't love to do the intermarket relationships because they
Yeah.
change. Um,
Yeah.
but that I certainly it could. Um, you look at another interesting thing. You look at international markets, which have not been faring very well lately.
Strong
But
dollar.
they've had weak currencies at the same time, which should be
Right.
helping them, and they've done nothing. But I think a dollar pullback certainly would help some of these international markets
Oh, the emerging
domestically.
markets. Yeah.
So that certainly that could be a catalyst. Where's my euro chart? It's obviously kind of the inverse of the dollar,
Right.
which is by definition. But yeah, the euro. This is the FXE. We trade ETF. So yeah, you're tagging that 61 retracement of
Yeah.
that
Right.
recent rally. So you could see reversion there. You could see
Yeah.
reversion in yields,
Yen
bond
yields too.
yields. Um, Certainly the benefit of doubt's the upside, but you could see
Yeah.
certainly a nice mean reversion. I mean, positioning is certainly set up for it. Everybody's long um,
Yeah.
dollar short bonds, so
Right.
certainly you could see a nice reversion that should help equities, I would think, although I don't think equities here in the near term are out of the woods. Um, Certainly, our models, our indicators have not turned around. So I think there's certainly more to this recent correction
Yeah. I'll sell a
potentially to
rip.
play out.
I'd sell a rip, Dana, right up around that red moving average if we get one this month. I think
Yeah,
there's one more shot down.
for sure. Because I mean, you look at and a lot of the broad averages look like this equal weight. This might be a short-term bottom, but
Right.
yeah, up here around 180 on the
Yeah.
RSP,
Right.
you could get another wave down. You've seen, we found good support in the near term. You got the 23 retracement from that
Right. Yeah.
22 low
Yeah.
and the 200-day average, which is that the green line there. Similar story in the value line arithmetic. So this one measures the average stock in the market. So same thing, testing some fib numbers. We got the 200-day, but you haven't gotten any sort of a bounce off of it. So when I don't see
Yeah.
immediate bounce off of it, I think, okay, we're setting up for
Yeah.
another down leg, ABC
Yeah.
type move,
Yeah.
bear
Right.
flag type move. So could get a bounce here, but yeah, I would, if you're not defensive, I would get defensive into some kind of a bounce here. This is another interesting thing, rewinding back to December. So here on the value, and this isn't the only one that did this, that 161 extension from the 2022 bear market, this value
You,
line tagged it perfectly
yeah, look at that.
just before
Yeah.
December and turned tail. So
Yeah.
sometimes these things work, Dale.
It still amazes me when my lines get tagged. Um, but now I call them magnets, so I'm not as surprised.
You're right.
Now I'm surprised when they don't.
Yeah.
Anyway, I was going to ask you, um, are you in any kind of agricultural area in stocks, fertilizer, ag base? Because China came in and made a very large purchase of beans. All the grains look good. Corn's been going up for a while. And I think the reason these fires are happening here, besides, I don't know how they started, but we don't have El Nino anymore. We have La Nina,
Mm,
which is cold and dry, which will, um, stress the crops out later in the
yeah,
Midwest. And China knows that.
yeah.
So, that's, I think agriculture is going to be a great area, grain related stocks. Do you own any or ever
I
trade any?
We do. So it's interesting you said that. Commodities in general starting to move
Yeah,
again, right? I'm
yeah,
sure you've noticed. So here's the
yeah,
CRB index has done
yeah,
nothing for years, starting to
yeah,
move again,
right.
just popped above that 61 retracement. You mentioned some of the ag names. So DBA, we've
Okay,
been in
yeah,
for a while, still looks phenomenal, right? And this is not adjusted for this huge dividend here. So we're up
okay.
in new high territory here.
So this has been
DBA. So
going
a
on
lot
for
of
a
the
long
softs,
time.
yeah, a lot of the softs have been moving. You look at cattle, I mean, new highs still, but
Yeah,
stuff like not just the grains. Here's corn, we're long
yeah,
corn starting to move. But
yeah.
cocoa,
Oh,
coffee,
yeah,
I mean,
yeah.
these things are through the roof.
They've
Yeah,
done plenty of it.
for sure.
So
And
I
we're
think
seeing
it's a
other,
grain. The
yeah,
grains have been like, people hate the grains.
yeah.
They hate the euro and they hate the miners. And I want your look on GDX if you would share that, Jamie, because even gold and silver bulls hate the miners. And I think they pulled back to a pretty important area a couple weeks ago, an old breakout. And I don't know, most people I talk to don't like the miners. They hate them.
Yeah.
They go,
Well, you look,
you'd be better off going to Vegas.
well,
Oh, that's copper.
most people that are in the minors probably been in them for like 20
Yeah,
years, right?
that's
And
why they hate
why
them.
would you not hate them if you've
Right.
been in this
They
for,
should have hated them before they bought them.
right? Well,
Now's not the time to hate them, I don't think.
that's why we try to be objective and go to, our investment selection
Yeah.
process is relative strength. So we want to go to what's working. And obviously, this has not been working for a long time, GDX and the gold miners. We are long. Because we do like gold. We've been long gold for a while. We've
Yeah.
been long miners. We've been trimming. We trimmed some into this bounce.
Okay.
Don't love it here. It's gotta prove something to me. So if
So
if
what?
you're calling a
Break.
bottom,
Yeah,
uh,
I'm calling the
that
bottom.
okay. Well, that makes me feel better. But it's got a lot of resistance get through here. And you look
Yeah.
at silver miners,
Silver's worse.
hitting lower lows.
Yeah.
You look at copper miners, has been
Better.
you know,
Eh.
it's been
Yeah.
okay, but kind of
Yeah.
unpleasant to be sitting through all this. So you got spurts that get you excited. Nothing is better for
Okay.
sentiment than rising prices, and people get
Yeah.
excited and pour into it. And then how long have they gotten the rug pulled out from under them though? So
Yeah.
for decades. So especially, I mean, you think about what have they been waiting for? Um, the gold bugs.
I have rug burns on my knees
Yeah.
from that.
What have the
Uh,
gold bugs been waiting for,
this is it.
I don't want to hear about that, Dale, but yeah, for a decade plus, this is what they've been waiting for. And then you look at
Yeah.
the miners action, it's like wah wah, So I don't
Yeah.
know if they're going to get going. Um,
All right.
they're in the short
That's
term, they're more
fair.
of a sentiment thing. So
Yeah,
maybe
see?
sentiments is bad enough that they can get going. Right now it's for our models, they're
Okay.
okay. They're not like screaming, okay, this is what you want to be really aggressive in. So, but
All right. Well, then let me ask you this. Some people are calling WTI a breakout this week. I know you trade oil related issues and ETFs. Where are you at on that? 'Cause I know others, some bears that are saying that this is a selling opportunity in the oils.
yeah,
WTI
similar.
anyway.
Yeah, similar to the CRB, which is really CRB is pretty much just crude. So I had a nice move, but again, it's you got a lot to prove here. This is a GSCI crude
Man,
oil index. You got a lot to prove if this is
yeah,
going to be a real move. Um, I do like,
two-year base,
if you go to USO, looks a little bit more encouraging for sure. And
natural
um,
gas looks the best. So
natural gas as well, but that's the widowmaker, right, Dale?
yeah,
I mean,
yeah.
every time you think, okay, this is the
This
one,
is this
yeah,
is man. I'm
is this the
telling you.
one? I don't know. I'm
Just
long,
call your insurance agent and buy a dip.
yeah, I'm along a little bit, but always
Uh,
very, I always expect to be wrong on that trade,
uh,
but long a little bit there.
all
Uh,
right.
the one I The one we are long XLE, the
Okay.
energy, the equity ETF.
How about
Interesting to
Mag?
me because real quick, okay,
Okay.
testing the highs from a decade ago.
Yeah.
So
Yeah.
maybe the
Yeah.
last couple years of consolidation is healthy. We
It's
haven't
just been
fallen off the
sideways.
table. Yeah,
Yeah.
maybe a modified cup and handle type of situation. Because if we broke out, and breakouts don't work anymore like they used to, that it's
Yeah. There's a
usually a
lot of
rug
false.
pull, but
Yeah.
then we turn around and go. So we are along this. It's held up nicely.
Okay.
But a breakout here would be, something that could be pretty explosive. You have to get people doubting and betting against it though, which is, people have turned against crude oil, like your friends that are doubting this move. So,
Yeah.
eventually I like the prospects for this one. And maybe that has to do with the incoming administration, which should be, quite obviously a lot more favorable, but we'll see.
Okay. God, we covered the whole board. Do you
Yeah, let
think
me
Mag?
tell you one thing about, okay, where
Go
am
ahead.
I extremely bearish long-term equities. So we look at the longer term, what we call the background picture for risk in US equities, and you look at long-term metrics like oh like household investment.
Yeah. Record
They
highs.
got
Right.
record highs. 43% of household financial assets are in stocks. You look at valuations are basically the highest they've been except for the 2000. You look at things like the Buffett indicator, market cap to GDP, all-time highs. You've got market cap is twice what GDP is for the first time. All these background, and they're not timing indicators, so they're not
No.
helpful in managing money, so to speak, but they're helpful in getting and gleaning an idea of the overall risk situation, and very highly correlated longer term 10-year um, investment returns, stock returns, and they're all pointed to basically as high a risk situation as we've ever been in this country from an equity standpoint. So from that standpoint, I'm very pessimistic on, if I'm going to buy and hold over the next decade or so. I'm not too optimistic about those returns. So
Well, that's why
again,
people are going to need people like you. I've been saying that the days of owning the spider and playing golf every day is over.
yeah,
And
that's
people
well,
are going to have to learn to be tactical, and they need people like you to do
if
it.
that, yeah, that would be my point. And it's hard to get people to consider that
Well,
type of management
yeah,
when you're hitting new highs every year
yeah,
and things are hunky dory, and
yeah.
especially
There,
we haven't had a terrible, we've had some corrections 2022, we've had some corrections this summer, a little shots
they don't
across the bow. We
stick.
haven't
Yeah,
seen
no.
since the financial crisis really real pain, and I'm talking about Great Depression or 1970s type action where you don't go anywhere for a decade plus, and that's something that people aren't planned for. I think you need to have an open mind, and if you can open your mind to at least diversifying some of your portfolio to managers or strategy that takes that
Yeah.
into account, I think that would be probably the smartest move you could make right now.
Okay, well, show people how they could reach you.
Oh,
If what we've said today reaches them. And you know what? If you have huge capital gains, that's great. But let me tell you a story. I had an office in Cardiff by the Sea in San Diego, and it was in the dot-com bubble. And after it popped, people were coming to me and go, Dale, what should I do? And I said, sell. And they said, oh no, my capital gains would be too much.
yeah,
So they ended up giving it all back and then some because they didn't want to pay the taxes. I said, be grateful that you have capital gains and you have taxes to
absolutely.
pay. Anyway,
Absolutely.
don't ever
Yep.
make that mistake, a market decision based on a tax event.
100%. Yeah,
And
I agree with you.
it's always so great talking
And
to
here's
you,
your
man.
old apartment, Dale.
Oh yeah, Bob Newhart. I went
Marina
down and had
Towers. Yeah.
we
Um,
met in the bar down there, Bob Newhart and I.
oh yeah. Wow.
I'm
Rest
kidding.
in peace, right? Yeah.
Yeah.
Um,
Anyway, go ahead.
anyway, yeah. So like I always mention, our main business is managing money. We have a registered investment advisory, but we also have this service for I know most of your listeners are traders and like to pull the levers themselves, but we do have
Mhm.
a service, the lion's share, where we give you on a daily basis what we're looking at, what charts, what analysis is on our radar, and then we also tell you exactly what moves we're making in our portfolios. You just pull the levers yourself. So if you want another view, another lens, and you're interested in following what we're doing, this is one way to do it. And we did run a 20% off holiday sale a couple weeks ago at the holidays. If you're interested in that, I'd be happy to give you 20% off. You just reach out to
Okay.
me or Dale.
Wow.
And
Yeah. That's
yeah,
generous. So, um, uh, I'd recommend you guys think about it. Dana's from Chicago, and I think it's an edge because there are a lot of traders that still are in Chicago, even though the floors are gone.
yeah,
So Dana has had this long-term idea behind it and still following his models, which was probably a lot of work to generate them. Um, every time I talk to him, he, you know, has been taking advantage of things that are going up and avoiding things that are going down. That's the bottom line, bro.
that's the goal, right, Dale?
Yeah, and I hope that you and your clients, what is it? They all thrive in 25. And
I
and
like it.
and here's what I'm telling leverage
It might
traders.
be survive, but let's
It
hope it's
will, well, we
thrive.
could thrive. We could thrive while others are trying to survive.
Yeah.
And I know it's going to be not easy for anybody. But you know what we have to do then? Let's have a good decade next year.
Okay, let's
All
do it.
right? You like that?
We always have something to be grateful for, right, Dale?
Exactly.
Yeah,
Exactly. So, the fact that we're in the markets and can afford to do that, and
yeah,
the fact that our relationships are, we're not going to be thinking about our best trades when it's all
right,
said and done. All right,
right.
brother. It was great.
I'll let you speak your punchline for for yourself, but
Oh, what?
I agree with it 100%. And it's always nice talking to you, and you've got a
Yeah,
great
Dana.
community there. I appreciate being on every time.
All right, Dana. Happy New Year, buddy.
Same to you, Dale.
All
Take
right,
care of yourself.
Dana Lyons, everyone. Follow him at J Lyons Fund Management on X and go to his website. He's a great technician too. So I think he should be part of your intelligence gathering. Always learn from Dana every time I talk to him. All right, everyone. Don't just count your pips, count your blessings. See you tomorrow, Thursday. Okay. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.